The subject of this video is the 5 elements of accounting, and this is the first part. And it's taken from chapter 2 of Eigo de Manabu Kaikei Nyumon, published by Chuo Keizaisha. Okay, there are 5 categories called the elements of accounting, and these are assets, liabilities, equity, income, and expenses. However, in this video, we'll only consider the first 3, assets, liabilities, and equity. Assets. An asset is an economic resource. It's something of value, owned or controlled to contribute economically to a business. It's best understood from examples, so here are some. Cash, bank accounts, machinery, patents, office equipment, buildings, and something called accounts receivable, which means amounts owing to a business for goods or services sold on credit. The second element, liabilities. Liabilities are economic obligations of a business, usually to pay something. Examples of this are, there's something called accounts payable, which means amounts owing by a business for goods or services purchased on credit. Bank loans the business has taken out. Taxes owed to the government. Salaries earned but not yet paid to employees. All these are examples of liabilities. The third element, equity. Equity is the amount belonging to the owners of a business after subtracting liabilities from assets. And of course, in the case of a company, the owners are the shareholders. There are 2 examples that I will give of equity: share capital and retained earnings. And other videos will explain what retained earnings means. These 2, share capital and retained earnings, are not the only kind of equity. There are other types, but these are the 2 most important kinds. The 3 elements of accounting that we've studied in this video are linked by an equation called the accounting equation, which is assets equals liabilities plus equity, or assets minus liabilities equals equity. And from this, assets minus liabilities equals equity, you can see that the equity, the amount which belongs to the owners of a business, is the excess of assets over liabilities.